So we'll start off with the year-end result. Operating profits were 845 million, which was substantially down from last year of 1.7 billion, down 53%, mainly due to an impairment charge, which I will talk about later on. Year-on-year, sales were down in bar terms 5%, operating profit down 53%, and the margins also dropped substantially from 7 to 3. EBITDA was down 25%, but still generated 2.6 billion, and net profit after tax was a loss of 646 million, down from a gain of 1.7 billion. So for the quarter, the group registered an operating loss of 37 million, which was down 228% from a year ago, and 276% from a quarter. So for the quarter, on a year-on-year basis, revenues were down 10%. And as I mentioned, operating profits went from a positive to a loss, from 29 to minus 37. Operating margins were negative. EBITDA was similar at 426, but the net profit after tax was a substantial 1.7 billion. The net cash and short-term investments did actually increase 31% from 7.8 billion to nearly 10.2 billion. And the reason for that was three things. One was because of the private placement, which was done in 23 October, but also a reduction in the capital expenditure in 2024 versus 2023. And also a conversion from high levels of inventory into cash over the year of 2024. So those three items combined to increase our net cash and short-term investment. On a quarter-on-quarter basis, revenues were down 9%, and the others were the same. So the key factors impacting the fourth quarter and year-end results was a substantial impairment charge of 1.8 billion that was taken at Powermaster due to the significant decline in the market conditions for both our silicon and silicon carbide activities. So you may recall in the last review that we did that we informed everyone that we plan to exit the production of our silicon manufacturing and move that to a foundry model where we have identified a foundry in China. So about 60% of that write-down relates to the exit and the impairment of the silicon equipment, which after we move, we do not need. Now we will try to sell that equipment. There is a market for second-hand equipment, and some of the equipment can be converted to use the silicon carbide, but we've taken the prudent view to write it down to zero at this point in time. In addition to that, about 40% or 45% of this charge was due to the significant drop in the demand for silicon carbide, which we have installed the capacity over the past 2 years. And this is due to the market conditions. So this impairment charge, which is approximately $54 million, is a non-cash impairment charge and represented about 41% of the net book value of PMS at that time. Okay? This reduction will also reduce our depreciation by approximately $1.6 million in 2025. Also, there's a raw material write-down of around 260 million, which reflects the replacement value of the materials that we bought in PMS. So just to explain that to you, during the course of 2024, we would buy raw materials, for example, at 100% the price. But the price of the raw materials have dropped down substantially, which is a reflection on the entire market situation, which means that the replacement value, the new price that you can buy materials, are substantially lower than the price that we did buy the materials because of the fast reduction. So from an accounting point of view, you need to recognize the fact that the materials that you bought are now more expensive than the materials you can buy in the future. So that's why you have to take this also an impairment charge on your raw materials. So this was also taken at the year end. So let's move on to the core business for now. Hana Micro in Lamphun, on the quarter-on-quarter basis, sales were down 7%, and on a year-on-year basis was down 5%. That actually is not too bad, considering, I would say, an overall weak market situation. Demand for automotive, industrial, and test and measurement still remain quite good for us, but our commercial and medical business didn't really grow much. We work hard to improve our productivity. Thailand had a minimum wage increase, although it was not as much as we first thought it was. So overall, we managed to reduce our direct labor down by close to 8% year on year. So that's a good result, considering the overall increase in the minimum wage was around 3% at the end of the year. We think the outlook for the first quarter will remain pretty flat, but we do see a good pipeline of new opportunities, particularly in our test and measurement business. I just came back from visiting our major customers, and of course, everyone is very worried about tariff issue, which I'll talk about later on. But there are still opportunities to grow our RF business this year, despite what I think will be a difficult situation because of the tariff. And we will be talking a lot about tariffs over the course of this review. But the situation I still think is very unclear, but we'll know more about it maybe as early as next month. So in China, unfortunately, China is the country, well, along with Mexico and Canada, but I don't have a big exposure to those. But China, where we have our facility, is also impacted. As you know, the US has imposed now 20% additional tariffs on top of the tariffs that were already in place before last year. So for some of the businesses, the tariffs were already 25%, so that means a 45% tariff. And many of the activities that we are doing for our American customers, that is unsustainable. Fortunately, because Hana has operations in both Thailand and in Cambodia, we have managed to keep most of the businesses by moving them over to Thailand and Cambodia. So that's the good news. As a group, we probably will not lose too much business, but it does mean that our China operation is going to go through some difficult times. Anyway, for the fourth quarter, sales actually did increase 2% and down 1% on the year. I think mainly a lot of our US customers were rushing to get orders in before the tariffs increased because everybody knows the tariffs are going to go up. Also, our inlay business got certified, and that has grown, helping us to offset that weakness. But overall, I would say the first quarter is looking quite challenging. I would say the whole year is looking quite challenging if this level of tariffs of around between 20 and 45% remain going forward. Moving on to Ayutthaya. Again, very challenging situation for us. Our fourth quarter, the sales were down quarter on quarter by 18% and a substantial year-on-year drop of 26%. The average loading in our factory in Ayutthaya hit below 40%, which is an all-time low, primarily due to weakness in automotive, commercial, and industrial as well. Our Ayutthaya factory is now running on a 5-day week. That means 2 days a week. We shut the factory down to save electricity. I can say that most OSAT businesses in Thailand are running like this, and some of them I heard are even running 4-day week. So whilst overall semiconductor business looks strong because of the AI, but for what we call legacy business, old business, many of our customers are very concerned about the tariff issue and have been trying to reduce their inventory because of the uncertainty. And that situation is painful and hitting all of us, including ourselves. Only the mobile business has remained fairly reasonable and has not dropped too much. It did drop, but not to this level. And looking ahead, we see the mobile business looking stronger compared to the rest of our industrial and automotive business coming out. We do have new opportunities which we're working on. And interestingly enough, we are now starting to receive interest from Chinese companies who, of course, are impacted by the tariffs and are looking to move. This China Plus One is being embraced by Chinese customers as well as non-Chinese customers, because Chinese customers are losing business because of the tariff and are looking to work with countries who will not be as tariffed as much as they are. But Thailand, the issue of tariff for Thailand, I think will come later on. So we have to watch that carefully. It may not be the answer going forward. The IC business in Jiaxing was actually improved from a very difficult situation, but that was mainly due to the recovery of our EV module business, which is a big part of our business. But the general OSAT business is running at a loss and is extremely weak for the reasons I just told you. Okay, we do have some new customers in the R segment, local, which is helping us. But the increase of 25% on the quarter and 64% on the year, and that's on a low base, by the way, it was mainly due to the recovery of our EV module business going to America. Our American customer tells us that they have what they call a carve-out. Tariffs are imposed, but there are certain industries that the US government given exception on, and one of them is automotive, as you saw between Canada and Mexico. Nevertheless, because of the overall sentiment in China, the outlook still remains very, very difficult. So here's a chart showing that actually last year sales increased 19%, but that was very much due to the significant growth of AI. Okay, I would say the rest of the legacy or standard chips actually fell, and unfortunately we are in that segment. As I mentioned earlier, smartphone business was good in 2024 compared to previous years because the smartphone business has been weak or dropping in 22 and 23 as well. 7% growth was registered according to Canalys, and in the fourth quarter, year-on-year was up 2.4%, and that's reflected in our outlook for this industry as well. So here's a chart to show you the average loadings. We calculate them by million wires per month, so you can see the substantial drop in the fourth quarter. And I believe that in the first quarter we will see again another drop, but albeit probably very, very slight drop, and hopefully that will be the bottom. But of course, the unknown situation is the tariff and what impact that's going to have on the global economy going forward. Moving on to our US operation in Ohio, whilst overall you see here a 21% drop in the quarter and a 12% drop on the year, they actually had quite a good year. And this drop is a reflection on the finalization of the move from our old factory to the new factory. We did see a drop in our car tag sales due to some changeovers, but we think that's going to recover. And overall, our Ohio operation, despite those drops, did post the third consecutive annual top-line growth. And our certification of our inlay business by Auburn, the ARC certification, we think is going to help us drive our growth this year. So we're still optimistic that Ohio will grow again to the fourth consecutive annual increase. We are now one of only 7 companies globally certified by Auburn, and that we believe is going to help us grow our business, and we're well positioned. So I'm quite optimistic. And as you know, Trump is pushing very heavy to invest, made in America. So we're well positioned for that growth. However, if overall demand for everything that people buy in America is going to be impacted because of inflation, tariff-induced inflation, that may have an impact over our overall growth. Despite that, though, I still think Ohio will grow in 2025. Cambodia also was difficult, albeit 10% in the quarter, but 10% up in the year. And Cambodia is going to definitely benefit from the high tariffs in China. We already see and have confirmed with our existing customers to move certain operations from our China operation to our Cambodian operation. As I mentioned, whilst that's difficult for China, Cambodia can benefit. As you may know, our Cambodian operation is now managed by our Lamphun management team, and they have done a good job in reducing costs and improving productivity. Our TAA compliance, I think, now offers good opportunities for American customers who need that certification. And I genuinely believe that this year Cambodia will be profitable going forward. So whilst the fourth quarter was a little bit difficult, the outlook for 2025 is going to look more positive for us. So here is a chart showing the product end application. Okay, telecom dropped slightly, industrials were up, auto down, RF slightly up, consumer flat, opto down, computer down, and medical down. Okay, so let's move on to PMS. So PMS, as I said at the very beginning, we took a charge of 1.8 billion to reflect the weakness both in silicon and silicon carbide, and because we're moving the manufacturing of silicon, we're stopping the manufacturing in Korea and outsourcing that to a Chinese foundry. Our sales on the quarter dropped 17% and we're down 6% on the year. The overall demand for silicon carbide has dropped very, very substantially over the past year 2024. And the main reason is because of the significant slowdown in the use of silicon carbide by the EV car industry in America and in Europe. Even though they have actually increased in America and Europe, the increase has not been in line with the expectation. China has actually increased substantially, even more than the expectation, but the pricing in China is so aggressive, it's very difficult to compete because this is an industry which is fully subsidized by the Chinese government. So for us to compete there, whilst we are competing, it's challenging. But in Europe and America, it's become nearly impossible at this time because there's far too much supply in relation to demand because of that situation. And that is why overall this impairment charge was taken, mandated by EY, our auditor. I will give you some progress updates on our move for the silicon operation to China. When you go through a process of developing the production of a new device, you go through 3 learning cycles. We call LC1, LC2, and LC3. And we have completed the LC1, the learning cycle, the first one, 168 hours reliability, and it's looking positive. So that's good news. Our target is to exit the silicon manufacturing in Korea by Q3, but that depends on the successful qualification of our products in China by that time. So it's important that each learning cycle is not delayed. Okay, so the good news is that the first learning cycle has been concluded, and the second learning cycle should be done in the next, I think it's 8 weeks from now. Okay, we are doing our very best to look at markets outside Europe and outside China. We're focusing on India. India, we believe, is the next big demand for silicon and silicon carbide, and we have partnered with a local OSAT company to distribute our products. So this will take time, but it's still a positive direction that we're working on. And we're focusing also on the Korean market, because that's where we have our facility, and the Turkish market, because that's one of the major production areas close to Europe. So aside from China, where we do have some partnerships, but as I mentioned earlier, very difficult to get in because of the cutthroat pricing situation, we're focusing on other markets, so the Indian, Korean, and the Turkish market. But overall, the demand for silicon carbide, we think, is going to remain very weak throughout 2025, and only in 26 onwards we would expect to see some form of recovery, because everyone stopped investing in this business because they also have too much capacity. But we believe that the EV business in Europe and America will gradually improve, slowly, and we'll start to get closer to the supply amount of silicon carbide globally in end of 25 and sometime in 26. That means this year will remain very challenging for us, still going forward. So here's a chart just to show you. You can see that in the last year, China was 80% of the global EV market, way ahead of everybody else. So you can see the black is the China, and above that is the Europe. The rest is US and Canada, and the very top is everyone else. So you can see China is more than the total rest of the world, plus more. So I just want to update you on our FT1 project. Basically, I don't have any further news, but just to let you know that we continue to monitor the business environment, which, as you can hear from me, still looks very, very challenging. And also, we are going to be monitoring the impact of tariffs on Thailand, which I'll talk about in a minute. So at the moment, the review process will continue, and we have not made any decisions going forward at this point in time. So from a financial point of view and liquidity, in the fourth quarter, we generated 426 million in EBITDA, which is a slight decrease from Q4 23. Overall, we generated 2.6 billion, down from 3.5 billion, a 25% decrease. CapEx was reduced substantially from 624 to 296. That's a 52% decrease. As I mentioned earlier, one of the reasons why our net cash is improving is because we're spending less. And overall, we spent 38%, 1 billion baht less in 24 versus 23. So our CapEx went down from 2.6 billion to 1.6 billion. Okay, so we will be monitoring this very, very carefully, given the uncertainty of the global situation, because the key issue to surviving through potentially difficult times is to make sure your cash balance is strong. So we ended the year with 10.1 billion versus 7.8 billion, an increase of 31%. So I think we need to talk a little bit about tariffs. It's hard to keep up with what's going on. Another day, another tariff. But as you can see from this chart, Thailand is similar to India in terms of the balance of trade between the US and Thailand, which means Thailand has a positive balance of trade. So if that's the case, you can imagine that we will not escape attention from Mr. Trump. Okay, so far, Southeast Asia has not been addressed by the Trump administration, but he is saying that next month, I think it's April the 2nd, he's going to turn his attention to the rest of the world in terms of tariff. Whether this is going to be on the basis of reciprocity, which means if you tariff me X% on an industry, the US will do the same. okay? Or whether it's going to be like in China and Canada, a flat 25% or X%. We don't know. But in Southeast Asia, Vietnam is the highest in balance of trade with 123 billion in 2023, so 24, and Thailand is number 2 at around 46. So I don't think we can escape the attention. We don't know, however, what will happen, and a lot will depend on what they do and also how the Thai government responds to that. So how are we positioned? Okay, Hana, last year, 19.5% of our exports went directly to America. That means 80% of our exports went elsewhere, even though I would say more than 60% of those exports, so that means about 60% of the 80%, ends up going to America, but not directly. So for example, we will ship goods to Malaysia, and they will put what we produce into something else, and they will ship that to America. So it's important that we watch very carefully, not only how Thailand may or may not be impacted by tariffs, but how our customers will be impacted by tariffs, because even if we don't ship to America, we ship to them and they ship to America. Okay, from China, around 16% last year, and that's going to reduce obviously because of what's going on, went to America. So on the basis of it, it doesn't look like we have a big exposure to America, but we also have an indirect exposure to America. And the impact on this will really depend on, one, what America will do to Thailand, and two, how the Thai government will respond to that. And let's hope that we can come out with a reasonable situation. But he's also saying there will be further tariffs on semiconductors and cars. And these are the two top exports to the US. So here's a list of the 10 Thai exports to the United States. Number 1, computers and electronic components, which apparently is about close to 85% of total US exports are computers and electronic components. Much below that, but still in the second bracket, is automotive, and then the rest is relatively small. Okay, so again, we have to see how tariffs will be imposed, and maybe we'll know as early as next month. So finally, some outlook. Every day we watch the news, and it's very dynamic. So the tariff situation is starting now. Canada and Mexico are retaliating, China also. So at the moment, our EMS business still looks positive. The OSAT business remains weak, and I think if we just set aside tariffs for now, we'll remain weak for the first half, and we would expect some form of bottoming out and improvement in the second half because inventory levels are pretty low. Cambodia, we expect it to be a beneficiary of this overall tariff because Cambodia's trading relationship with America is pretty low, okay, even though they do have a surplus, but it's tiny. And the demand for silicon and silicon carbide, as I mentioned earlier, will remain, I think, weak for the rest of this year. However, hopefully we can move out the silicon to schedule by Q3, and that will help with our loss situation in Korea going forward in Q4. So now let me address some of the questions that have already been sent to me. So one of the questions is, what are the underlying assets? 1.2 billion baht investment. Are they investment grade? The answer is yes, they are investment grade. Next question is, what remains in terms of PMS on Hana's book after the impairment? So it's approximately about 130 million now after the impairment of 54 million. What was the reason for the impairment? Was it external or internal factors? And as I've explained in my presentation, very much external factors. So in terms of accounts receivable, of course, some of our customers, like us, are going through difficult times and they delay their payments, but we don't think this is a serious issue, and we plan to continue to manage it. It doesn't mean to say that we may not get some increases in delays in payment, but we don't think it's a material problem because most of our customers are large companies. Billion. I think it's billion. The question about doubtful accounts, I have to get back because I don't think there's I think there's a misprint here. We never have a doubtful account of 13 or 16 billion baht. It's not possible. It'd be more in millions, not billions. Okay. The sale of land in Cambodia, yes, we did sell that in the first quarter of this year. There was a small gain, not a big gain, but certainly there was a gain. Question about any further additional redemptions from the Credit Suisse amount? No, that is being closed now because by accepting the deal from UBS, we waived the right to claim any further claim on them, and we recorded about 95% of our exposure, which is quite good. So weakness demand in China automotive is simply due to supply and demand. China has probably 50% more capacity than it actually needs, and that's why they're trying to export that capacity globally. The problem is the rest of the world is in the same problem and is putting tariffs on Chinese companies. So that is why the difficulty now is that there's simply too much demand in terms of capacity, and that is also in the supply chain for semiconductors and silicon carbide that relate to the automotive business. In relation to RFID businesses, the growth is predominantly retail. As I mentioned earlier, the concern now is that major economies are starting to slow down because of concerns of tariff-induced inflation. So if that really happens, if the tariffs issue is not substantially resolved in the next month or two, and inflation increases and consumers start reducing their purchases because of higher inflation, this is going to have an impact on RFID. However, generally speaking, more and more product lines in retailers are adopting the RFID technology, so that's a positive. But the overall demand of buying anything, if that drops down, that would be a negative. So challenging environment, absolutely. I think we're all in a very challenging environment given the uncertainty over tariffs and our particular situation with regards to silicon carbide. We are working hard to, as I mentioned, try to market our capacity outside China and outside Europe. We are cautiously optimistic that there would be some opportunities going forward, but we need to be realistic. These things take time. We have a good product line and we continue to develop next generation devices. So we still are overall remaining in the business and think long-term PMS can recover, but I think it will be not this year, I'm quite sure about that. It will be sometime, at the earliest, sometime in 2026. But positioning ourselves to get through this difficult time is important so that we can ride this time frame for us to recover. The question of expected cash drain. Well, I'm quite positive that we will be EBITDA positive this year. So we may not generate as much EBITDA as we would like, but we will still remain net cash positive by the end of this year. Given the cash situation now and given the careful management of capital expenditure and inventory management going forward. There will be no need for any capital increase going forward this year. So I've answered the questions that have been sent to me in English. If there are any questions in Thai, please feel free to do, and we have a translator here who can help us. Yeah. Any other questions?
No.
So whilst we're waiting for any questions to be sent to us, I'd like to just maybe give you a little bit more information about the marketing efforts that we're doing with PMS, because clearly this is the main problem for us. So we have engaged with some large distributors in India and a OSAT company where we will be sending our silicon carbide chips to them, and they will be assembling them in India and sold locally. You may know that India has a very aggressive policy to develop their electronics industry. In fact, the Indian government have in excess of $10 billion in subsidies for companies who want to invest in India. So there is a lot going on. India is the most populous country in the world, although probably not more than 10% have any money, but that's still about 130, 140 million people, sorry. So that's a big market, and they are very underdeveloped in electronics, but moving up fast. So partnering with some Indian companies, I think, is the right way to go. We had 2 weeks of extensive marketing touring the country, and we have met with some of the largest Indian automotive and electronic companies, and I think there's some good opportunities going forward. But again, these things take time. Qualification processes of silicon carbide or any electronics takes at least 6 months. If it's automotive, it's about 1 year. So there's a lot of opportunity, but it's going to take time. And I'm hoping towards the end of this year, we might see some positive results from this marketing initiative. Our marketing team has also spent time in Turkey. Turkey has actually quite a large electronics industry because relatively cheap compared to the rest of the EU. And a lot of EU manufacturing is done in Turkey because of the cost difference. So we think Turkey is an opportunity. Again, we have some partnerships with distributors and some major electronic companies there. So we think there's some opportunity going forward to develop that market. In Korea, we're starting to engage with some of the large Korean companies. There's some positive movement from them, and I think by the end of this year, we should start to see some results of that activity. In China, we have partnerships with a Chinese company to sell our silicon carbide. We have 2 partnerships, one to focus on automotive. This company has a lot of connections in the automotive business, and the other one is non-automotive, okay? But as I mentioned earlier, the price competition in China is extremely challenging because China already has both silicon and silicon carbide heavily subsidized by the Chinese government. So it's very challenging to sell, at a competitive price and make a margin. That said, as I mentioned earlier, the price of raw materials coming from China has dropped dramatically. It's one of the reasons why we've had to take the impairment charge on the materials. So going forward, we still think there's an opportunity to have a reasonable gross margin because of the drop in the material prices coming out of China, both for the domestic market and international market going forward. Please feel free to send your questions through in Thai or English. Okay, so if no more questions, I'll just summarize. Whilst, as you can hear from what I'm saying, the overall outlook is not great, it's challenging, and because we still have this tariff issue hanging over us, I can't say to you that I'm very optimistic about a big improvement this year. There's just too many difficult situations going on. But what I can say is financially, Hana remains very strong, and I'm confident that we will get through this difficult time going forward. And we think that we'll get through when the situation changes. So we have a question. So the question about tariffs. Well, Thailand has never been tariffed like this before. So let's wait and see what happens to us. And we may know as soon as next month. So I would say that this situation is quite unusual, quite unique. Okay. because the problem is America is by far the largest economy in the world, and you have a situation where this tariff situation can drive consumption lower in America. China, the second largest economy, continues to struggle because of their real estate problem. Their growth is much lower than anticipated. So when you have potentially the world's largest economy slowing down, which is induced by their policy, their own policy, you have China still slowing down because it relates to the US and in itself has not been growing because of their own domestic issues, then the rest of the world is going to suffer. So unless we sit down and work out and get rid of these crazy tariffs, then I'm rather pessimistic about the overall duration. But I do think that Trump's tariff strategy is for negotiation, not for long-term strategy at this level, because this will kill the global economy going forward. I think this is a strategy, and I think the situation could change for the better maybe in the next 2 to 3 months when everybody gets together and calms down and we get a better situation where tariffs overall are reduced, both from America and to America. Okay, I'll say goodbye. I think that's the end now. Thank you.